presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Eddie in Boca Raton. Hey, Eddie, what's going on?
Hey, Tom. How are you, man?
I'm doing great, man. Yourself?
Good, good. It is a treasure to have TFNN every hour during the trading day, to be there to help you, to guide you, and even to give you some peace of mind, or like that somebody else is there with you while you're trading this crazy market, either up or down.
Well, listen, we appreciate you growling and prowling with us out here, because we wouldn't be out here, folks, if we didn't have all you guys, gals, tigers and tigresses as clients. And, you know, the market teaches you every single day, man.
Now, Tom O'Brien.
Hi, folks. Basil Chapman here, sitting in for Tommy O'Brien. This is the Tom O'Brien Show on this Tuesday, the 30th, and the last trading hour of the month. And we're looking at the Dow down just a tad, down 7. Look at this pattern here. I'll show you this pattern that I'm looking at to see if it's going to unfold or not. We just don't know. Let me just give you, if I can move that away. There it is. Now, let's scroll up. Yeah. So there's a pattern I always look at. I look at 3 core lines: straight line up, straight line down. That's 1. A cup formation and an arch formation, a mix of 1 and 2 or 1 and 3. On the way up, you get these reverse Y patterns, where if you take out the left side high, you can go higher, and you can see each one of those Ys going to the upside. But on the downside, if there is a rally to just one peak, call it a peak A, or the second peak, which will be peak B, and then it fails and takes out the left side low, that's a real problem. So let me just show you what I'm looking at here. It hasn't happened yet, and I'm going to explain something right here. The Dow went to an all-time high of 46,714 on the 23rd of September. And it pulled back in 3 sharp sessions to the downside to the 45,785 level, just 1,000 points. And then it ran up to about a 50% line, and it's kind of stalled there. So it'll be I need to go to this chart right here and to show you something that I consider to be very important. Let's go click there and go there. Okay. So this is the pattern that I look at all the time. If the 9-period moving average, the green line, is above the 14-period exponential moving average, the black line, and then it turns below it, it goes pink. But look at the steadiness of the moves to the upside. And within that context, we're still green. And that 9-period moving average is above the 14-period. So until the price of the Dow goes sharply lower, and in sell signals that go to sell modes, you should get some bad news that impacts the market, and the market just tumbles down, and the Dow's down 480, then 570, the S&P's down 52, and then 64, and tries to rally, can't rally, and at the end of the day, it closes at the low. Overnight, overseas markets try to rally, and it fails, and it closes at the low of the day. Then the morning opens weak, and then it tries to rally, and then it fails, and it goes down just as sharply the next day. We have not seen, look at this. You haven't seen one of those forever. Look, since the April low, we haven't had anything close to that. So as I see it right now, so on a purely technical basis, because of this dreaded H pattern, this lowercase h pattern, we did implement a short on the Dow. We do have a 3 times long position, a core position there left, and I did as insurance, because we have a long positions that are really good. I didn't want to get too carried away on the short side, so I said wait for a dip in the Dow. If it hits a certain point, we can, because it could continue lower. Let's just enter a short position, which is what we've got, with a very tight, like a 1.2% stop, just as kind of an insurance, and that's where it is. But we haven't rolled over. It would have been if we're at the low of the day of 46,100, then it would look like, oh, it's turning up. But that 9-period moving average you just saw in that chart, look, it's still very, very strong. Let me get rid of this. I think it's just messy. It's not proving anything. It's a rising wedge formation. There are certain patterns that go with it, but I don't have to talk about it right now. Remove the trend line. Okay. So I've got these 9 and 14-period moving averages as good support. Okay. Now, as it stands right now, so the Dow is still holding very well. The MACD is weak. The relative strength is weak. Stochastic is weak. And the on-balance volume is rallying. That's good. But though my core indicator here, the 914, is still holding very, very well. Look at the S&P. Slightly different chart. A slightly higher bounce after the 66.99.52 low of about the 23rd of September. And it's holding very nicely. Look, that 9-period moving average is way above the 14. But the MACD's gone weak. That's the red and green line. The relative strength is somewhat weak. The stochastic is under 80% to 72%. On-balance volume is good. Then you've got the QQQ. I'm not going to go through each one. I say it's almost the same thing. 9-period over the 14, very strong. MACD is still actually very good. And if you go to the IWM, this one is very weak. These are the iShares Russell 2000 ETF. These are the small caps. They're impacted by yields, and a lot of them are much lower price in stocks like the S&P and the Dow. So this is got that H pattern. It's getting closer to rolling over, but it hasn't. It's down $1.06 at 240. I want to go quickly to gold. Gold is up $22 at 38.78. It's just been brutal. I mean, if I had to show you this right here. Look at that. Let's go to gold. Look at that. Look at that move. Look how way up above the 14-period moving average, the 9-period moving average. To get that to flip to pink, you'd have to see gold probably down at the about 36.28 level, and here it is at 38.78. Let's go back there. And silver's the same. Silver's the same thing. Look, silver is down 31 cents. It's just turning down off the all-time high, and the 9's still very strong over the 14. So to get these different mediums, different sectors to really pull back sharply, you have to get a brutal bad news that just it permeates the market very quickly. And then if the VIX index starts to trade into the 90s and then quickly into the 20s, you'll start to get that sell-off. We just haven't had that right now. It could happen, hasn't happened yet. I want to just show you something very interesting. High-grade copper has pulled back a little bit, but it's still acting very well. It was very weak before. It's coming back quite nicely. Crude oil right there. Crude oil is trading down. And let me just explain this right now. I don't want to go into it in my show, Tiger Technicians Hour. I'll do that. You'll see it tomorrow. I can do that. I'll explain it at 10 o'clock tomorrow Eastern Time. I'll explain a little bit more. But look, this is the inside propellant zone. We always look when you get to a D. That's where other things can happen. And look at that sharp pullback from that peak D. So I'm watching this closely. If crude oil goes under 61 in the next 3, 4, 5 sessions, that's really very weak. If it bounces, it needs to bounce very sharply. I want to also just show you here the bonds, the TLT. As we go to the break, the TLT is down 37 cents at 89.26, and the TBT, which is the yield, has pulled back, but is actually up on the day. I'll be back in a moment. Basil Chapman sitting for Tommy O'Brien in the Tom O'Brien Show. Be back in a moment. Dow's up 11.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits. The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Hi, folks. We're back. Basil Chapman. This is the Tom O'Brien Show. Tommy O'Brien's not able to make it, and I just in this segment, usually Tommy interviews me and discusses my opening call daily newsletter. Let me just say that we have a number of positions, and over the last week or so, many of them have been at all-time highs. We've added a couple. The latest has been Iran, and that has worked out pretty nicely. We got in at 2280. We've taken a little bit off. It's actually up over 100%. Trading at 47.22. It hit 49.30. This is Iran Limited ordinary shares, Iris Energy Limited, next generation data centers, renewable energy GPUs. Look at that beautiful move in this cup formation. We're talking about the cup formation. Look, there's the cup formation. Broke out of the 28.25 resistance from November of 2021. And it actually had gone down to $1.02 in November of 22. A year later, it goes from 20 to $1 and 20.25 to $1.02. Whoa. I mean, over a 90% decline. Now, it's done beautifully. It's gone peak A, B, C, D, E. It pulls back and then spirals up. We're not sure if this is a peak F, a leg F, or a brand new A. It doesn't matter. What the most important thing is the technicals are strong, but the stochastic in the monthly chart hasn't yet gone to 80%. It's at 77%. I feel much more comfortable when it's looking like this. Look at this on the weekly. Go backwards from the monthly. We go to the weekly. This is a leg east. We've got the whole week to go to see if it can go above 49.30. But looking at this, you see this relative strength here? It's actually gone red. It is very, very strong. Relative strength. The MACD, the histogram, the vertical line is still expanding. And the stochastic at 91% is flat, and that's just exactly what you want to see if you are positive on a particular symbol. The unbalanced volume is a little bit overbought. Now look at this daily. The daily has accomplished a very strong move to the upside. The 914 is the price is above the 9, and the 9 is way above the 14. The 200-period moving average is still moving up. The MACD is strong. In this case, the relative strength has pulled back, and the stochastic is under 80% at 79.32. So I'm watching to see, and what I normally would do, and I'm going to do it right now, is I'll draw this as a rectangle. It's a very big move to the upside, so it's going to be difficult to say if it makes higher highs and higher lows, it could go to a leg D. All that I'm saying in this case is that this is a pattern that could, arch over. So I'm going to watch very closely to see if in the next couple of days it actually can get above 49.30. That'll be very positive if it's able to do that. And I've got an instant restart. I don't want to go into it technically right now, other than to say within 3 bars after making the peak D, it goes to a higher high. And this could be E/A, thinking in the back of your mind, this is an alternate account, and an F/B. If it goes to 49.31, I can consider that's very positive. That's actually like a leg C. So this is it. And the key support is if it takes out on a closing basis the 39.70 low that was made on the 26th of September, I've got to consider that in this particular area, that's the area, the AI area, data centers, it's going to take quite a bit of a breather. It'll probably be a couple of weeks that it pulls back. So this is very important. Another one that we got was Symbiotic, which is down 51 cents today at 53.22. So we're in at 48, and it ran up to 61.23. There's that peak D. Other things happen at peak D. Daily peak D, weekly peak D, and monthly is only in leg B. So that's really positive. Most importantly, what I am watching is this particular cup formation. It hasn't had the strength to even get to the 56s. So over the next week, I don't want to see it crack 50 because then it could retest the entry point of 48. But this is end-to-end AI, robotic warehouse automation systems. It's been really good to us on the previous, not the previous, but the first big run up to 64. We were in, I think it was at about 20. And then we tried again on the way down just a couple of times, said, no, it's not working, can't understand why. And now it's working well. And this has Walmart as a major, I think probably the main buyer of their equipment. So where's Walmart right now? Walmart, we're looking at Walmart. Walmart has almost the same pattern. Look at that. And now it's starting to stall a little bit. It made a peak D in the weekly chart. So I'm going to be watching this very closely because does it have the potential in this phase right now to move much, much higher? And as it stands right now, it's done very well, but it needs to repair this pullback, the speed of the pullback. So, and then, of course, we still have a little bit left of Robin Hood. Robin Hood making all-time high in leg C. It still should go to a D at 141.90 right now. We have an initial position at 16. It's done extremely well, but not enough. That's all I can say. But it's done. There's your leg D in the weekly chart. So there are a number. We did get a position, just it's what have you done for me lately? We've got a position in real. This is real. This is the, let me just move this over. You can see it. This is Real Inc., online resale of authentic luxury goods, buying and selling PO and designer items. We're kind of in that phase right now. So how long can this last for? I don't know. I think it could last for quite a while if the market holds very well and has some kind of a sideways consolidation sometime in October, which I'm thinking is a possibility. But I am looking at, let me just do this right now because this is very important. Looking out, if in the Chapman wave buy modes imply at least 4 higher peaks. If this is only a leg A in the monthly chart, then if we make a higher high of 46,714 in the Dow this month, that means we've extended this leg A. If we don't, then this will become a peak A, and that means that's in October. So November is leg B maybe, December is peak B. January's leg C, and then a peak C in February. You can see this goes out into the first quarter of last year before it can get to a D. So that should be very positive looking out. So I just wanted to mention, just looking at Chapman Wave methodology, I'll go more in depth in my show, Tiger Technicians Hour. And also we do have GE. This is a deep cyclical. I like that. We're in at 198.90. It's trading right now at 300.49. It did hit 307.25. All of them have the same pattern. And it's a very strong day today of 6.91. And we've got our leg D. There's that fourth highest peak, leg D, in the weekly chart. Above 307.26. We'll extend it this week. If it fails, that'll become a peak D. So I just wanted to go through some of the things that I do. We've had Bank of America for a very long time. Now I think it comes the big test. There's that leg D in the monthly chart. There's the peak D in the daily, and it had a round number, 52 high, the day that it made its all-time high of 52.99. And we've been long since just under 32 for quite some time. Our target was this double top 50.11 that we were looking at February of 2022, and we thought we would get it this year. We've got it in leg C. It went to 52.99. Now we'll see, because if yields actually start to pull back, I think that Bank of America could pull back with some of the other banks. Let's see what else I wanted to show you. This is also quite, I think this is fascinating, but I need to show you this. This is Bitcoin. Bitcoin has had a fantastic move to the upside. But back in August the 14th at 125,200, I said, I think we're in for a sideways consolidation, which we've had. And we had a peak D under the previous high. This says Bitcoin is just taking a well-earned breather. It hasn't really broken out, hasn't broken down yet, but I'm watching it very closely because it's really stalling. I'll be back with Tim Ward straight after this break. Basil Chapman sitting in for Tommy O'Brien.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Hi, folks. Basil Chapman sitting in for Tommy O'Brien. Here's the Tom O'Brien Show. And I just had two questions. One was in the Tiger YouTube. EKS says, Basil never seems to mention earnings. I thought earnings matter. Yeah, the reason why I ran limited ordinary shares is because I thought I wanted an area of the AI data centers. I wanted renewable energy, and I wanted GPUs, and I wanted earnings, and they have one of the very few in the sector that has earnings, and the earnings came out, and they were very good. So yeah, and the other question came in, and I didn't see it until right now, was Snowball wanted about CCD. CCD is Calawas Dynamic Convertible Fixed Income, and because it's fixed income and it's made that peak, Dean, it's underneath the 200-period moving average after going to the 21s is at 22.96. I think it's just kind of stuck right now. I'll do a little bit more in my show tomorrow in the Tiger Technicians Hour at 10 o'clock. But right now, I just think it's kind of stuck. So I'm going to say I'm getting off this right now. I'm going to go right to Tim Ward. Tim, how are you?
Good. So how is your Tuesday?
So far, the Tuesday's been very good, but I also want you to, before I even forget and we run out of time, Tim, can you tell the listeners how they can reach you and just exactly what you do?
All right. My email address is tim@ord-oracle.com. My website's www.ord-oracle.com. I have a Twitter, which is @ord-oracle. You can just get there. I'm also on a Snapchat or something too, I guess. My daughter kind of signed me up, so I'm on that. But anyhow, that's how you can get a hold of me. So let's get started on the market, see what we've got going here. I did this earlier today. This is the daily SPYs, and it's different than what this is right now. But normally when the day starts out like this is probably this a couple hours ago, but I just took this quick reading. But the trend was right around 1.17. I don't have a reading right now. We had about 553 downtick readings. That's just this area had support. So I listed in the areas in pink before where you get trend closes above 1.2 and downtick readings below -200, and they all kind of come in the same region. You got to pop out of this area into this area, then it got bullish again in this area, then rallied up. And pretty much over the last couple of weeks, we haven't moved much. We kind of just went sideways between 655. That's what it looks like. Can't quite read that 665 up there. Anyhow, we're kind of in between a trading range, or we're kind of moving sideways. But it looks like normally if you get a reading, it kind of stays into bullish territory on the trend of 1.2 or higher, and downtick readings kind of consistent all day. Normally they close in that vicinity. So we got a support area here, even though we're not even, I thought we might pull back down to 650 area. I don't think that's going to be the case. For some reason, we're finding support in this vicinity right here. So we'll see how that turns out on the close. And this was interesting too, this next chart. This is the top window is the VIX, SPY VIX ratio, and next window lower is the SPY, it's the daily. And market rallied, and the VIX kind of went down, and you got a pullback for several days. And on that pullback, the market rallied up, and even though we haven't hit a new high when I made this chart, the VIX, SPY VIX did. So you got, so evidently, and I labeled this here, there also the Dixon trend when I did that a couple hours ago. And so there appears to be some support right here, right now, which is kind of odd because we're not even near, I thought we'd get down to a little bit lower level. I said 640 to the 650 range down in this vicinity. It doesn't appear that's going to happen because we're starting to get panic right here. And we got a SPX VIX ratio bullish divergence. So we'll see how the close goes. But anyhow, there is support support in this region right now. I'm neutral right now, but it depends how the close go. I might actually get along here, so we'll have to wait and see. Let's flip over to the gold market. I flipped. This market's really just strong, and it's outperforming pretty much all the other sectors. I don't know if another sector is actually this strong. I'll put it that way. But the top window is the monthly HUI. Next window down is the monthly HUI NDX. So you're looking at the gold stock market compared to the NASDAQ market. So you're doing a comparison. When this ratio is rising, then HUI, gold market, is outperforming the NDX market. When it's declining, then the index market is outperforming the gold market. And it does appear there's a 12-year cycle. Last time, matter of fact, we matched lows with lows, just almost right on the money. 24 years ago, we had basically the same low. So anyhow, but there does appear to be a 12-year rally as 2000. The gold market really ran strong from about 2000 to 2012, then extremely weak from 2012 to 2024. Kind of went sideways here for wasn't really weak, but went sideways. Now we got strength again. And how you can determine what goes on? Will the gold market remain strong again? Possibly over the next 12 years. I don't know how the time frame. But once you get the RSI of that ratio way above 50, we're almost like 70 right now. And that's usually initiation of strength off of a bottom. And so that once you get that initiation, normally it continues. The last time we had the RSI stay above 50 was pretty much from the 2000 low to 2012 high. Then he got weak. Then the RSI stayed below 50 going into 2012, from 2012 to 2024. Now you hit almost 70 here on this RSI, so I'm thinking there'll be consolidations along the way, but this ratio will probably, in general, stay above 50. In my opinion, possibly another 12 years. So this gold market, I think, is still in the early stages. Me and Tom talked about this actually a couple of years ago in 2023, I think it was. I thought this big gold market was starting to happen. I think it's happening right now. So I thought that was kind of important. Kind of want to repeat that. There's a lot of penny stocks in the gold market, so some of those penny stocks will turn into dollar stocks, if not more. So we'll see how that goes forward here. But here's the music.
Yes, here's the music. I just wanted to mention on the chart that you're showing, that huge cup formation, the higher it goes above the left side, the stronger it becomes. So that's very important. Thank you for mentioning it. I'll be back, folks. We've got Tim Ward on the line, and this is Basil Chapman sitting in for Tommy O'Brien. This is the Tom O'Brien Show. Dow's up 37, S&P's up 18. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Hi, folks. We're back. Basil Chapman sitting in for Tommy O'Brien. This is the Tom O'Brien Show. We have Tim Ward. He's been discussing the S&Ps, the perspective of the S&P and the GDX and gold itself. Actually, you went mostly in gold. So, Tim, could you continue, please?
Yeah, we kind of showed this chart before. This chart goes back to 1982, and from 1982 to 2008, basically the XAU gold ratio, which is basically it measures the gold stocks compared to gold. And so when the ratio is higher, that means gold stocks are expensive compared to price of gold. When it's low, gold stocks are cheap compared to price of gold. But anyhow, this ratio pretty much traded from 1984 to 2008, traded between 0.17 to, give or take 0.35. So it bounced around that trading range. So normally when you get above 0.35, you're kind of in this area. When you're below 0.17, you're down below this area. So it kind of helped pick out the highs and lows of a gold stock. So you can kind of see where the lines are there. So this high or low area. So anyhow, this area, for some reason, gold stocks kind of kept cheap. But anyhow, over the last 2014 to current time frame, this has stayed between 0.05, give or take, to 0.08, and which is super cheap. Even though the market has rallied here a little bit, it's gone up. Now we're just going through the ceiling here, but this ratio is still. More to point out here, this ratio is going sideways for about 10 years now. This back here, 1984 to 2008, is about 25 years. But I'm thinking we're going to break out of this trading range for 10 years because we're super cheap. Matter of fact, I have this chart going back to 1913, and anything below 0.10 or 0.10. Has been cheap according to history. We're half that. We were half that at one point. So even history is 0.18 cheap. So I think we're going to break out and actually go up to probably the lows of this pattern, because previous trading range lows are resistance, and that's at 0.17. So I'm thinking gold stocks, even though gold will perform, I think gold stocks is going to start out performing gold for the next several years. So we'll see how that happens, but I'm thinking we're going to break out. This ratio at 0.08 is not going to hold it back. It's actually going to go higher. So what I'm trying to say is gold stocks, I think, are relatively cheap yet, and I think that the rally in gold stocks is not done. I think we're looking at something what happened in 2000 of 2012. I think we got something like that going on. Here's another chart that kind of says this rally is probably has further to go. The bottom window is the 18-day average of the up-down volume. Next window higher is the bottom window is 18-day average of the advanced decline. Next window higher is the 18-day average of the up-down volume. And this chart goes back to 2014, and every time it got above 40 on both those indicators, which that's where these lines here happened, and it shows you what. Actually, we had this twice happen over the last couple of months. I had one in mid-August, another one's mid-September, so it kind of had a double sign of strength, I'm going to call it. But once you did that, the market still rallied for another 6 months. This one's the least one, only rallied 3 months. But anywhere from 3 to 6 months, once those signals are triggered. So at minimum, it should rally to year end and possibly could rally to next March. Don't know. But my opinion, this rally is not done yet because we have a sign of strength off of... we actually have a sign of strength where everything's really participating. And I did another one, which is a little bit longer term. And instead of an 18-day average, I used a 50-day average of the up-down volume. And kind of similar situation, not as many signals. This chart goes back to 2010. And we only got 2 of them before. We had one in 2016 off of that rocket up, and we had another one off 2019. So one lasted 5 months, the other one lasted 1 year. But this is a 50-day moving average, so it's a lot bigger time frame, which in my opinion carries more importance. Anyhow, we did hit like 30 on those previous 2, and we hit like just right at 30 on this one. We're currently at 27.5 right now, still strong. Excuse me. So this suggests that we got either 5 months or a year to go. It depends how you look at it. But on a 50-day average, with that much strength going into the gold stock market, I think we're still early in the game for this rally to continue, even though we'll have some consolidations. The consolidations, I think, are probably going to be fairly mild. So, anyhow, I'm still bullish on gold stocks. I don't think we had a top of any consequence, at least not yet. And that may change, but gold stock trend is still up. Doesn't say anything about gold, but gold has really done well over the last couple of years, where gold stocks has kind of rallied. Now I think they're playing catch up. So we'll see how long that catch up goes. But I still think we're in the early stages of this bull market. I think a lot of money to be made yet. So anyhow, that's my analysis here. Do you have any questions or?
I do have a question. In the chart that you're showing, there's this huge bowl formation, like a flat cup. And do you have any perspective on the way your ratios work as the price, in this case of the GDX, breaks out? What would you expect?
This huge, in other words, are you talking about a cup and handle thing?
The indices you're looking at now continue higher. You expect that the GDX will turn the left side lip into a support level and just push higher?
I'm thinking this whole thing is William O'Neill's cup and handle thing. If you want to go read about it, or your listeners read about it, you get these great big cup and handles. It works on the daily chart. This is a huge cup and handle. If this is the cup, then you got a handle that kind of goes sideways for probably a number of years. But I don't know if that's actually what that is for sure. But you're asking me where GDX is actually heading to. The only clue I can say about that is GDX will stop going up when this ratio gets to resistance, which is that XAU gold ratio. It gets up around 0.18. Wherever GDX is at that time will probably be a resistance, because that resistance line was something like 20-some years. So that 1.1, 0.178 or 0.18 round off numbers is going to be a big resistance, but we're a long ways from that right now. I think we're coming in still below 0.7, I think. So,
well, that's a fantastic analysis, Tim. I really appreciate it. I think our listeners appreciate it. Folks, don't forget, you can go to Oracle and check this out. And thank you, Tim, and we'll see you on Thursday afternoon.
All right. Talk to you then. Thanks a lot.
Thank you very much. Folks, the Dow is up 46, S&P's up 21. Basil Chapman sitting in for Tommy O'Brien. I'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Hi, folks. So we're looking at the Basil Chapman here for Tommy O'Brien. We're looking at the 10-minute E-mini in the strong leg B. We've got the 5-minute with the Chapman Wave. This is an instant restart. I've spoken about this earlier. So we've got a G/C, and it's 354. I have a technique that I developed a long time ago based on what happens at 352. I call it the Chapman Wave 352. Now, certain factors have to come into play, but right at this particular moment, we've got a very strong S&P mini up 27 at 6,739. If it can cut, this is really important, in the next, I wouldn't say it's more than a minute, next minute, it has to get above 67.46. It's at 67.42 right now. If we can do that, we could have a Chapman Wave 352, and what that implies is that as the price increases after 352, 52, there's a chance that the price of the E-mini can actually go all the way into the close to the high of the day. And even after the close at 4 o'clock, it can go slightly higher. So we'll see if that's going to be. In the meantime, let's just go on here. We're going to go back to the market overview. Couple of things. So within the context of the Dow itself, the Dow is up 107 right now. This is a very good action. That's almost, I wouldn't say it's negating this H pattern that we were talking about in the very beginning of the show, but the higher this goes and the chance of the 914 still holding very strong says that, wow, in this particular phase, you might be able to even get to the 47,714 all-time high. But most importantly, I want to emphasize that when there is a turnaround, a very strong negative move, it's usually because of the economic conditions. And if something out there says bad news, then the market has to just constantly have waterfall cascades every single day and night for at least 2 or 3 days. We haven't had that for ages, and we aren't even having it now. Still a very strong market. Going to wrap it up. This is Basil Chapman sitting in for Tommy O'Brien, the Tom O'Brien Show. Check out my opening call daily newsletter and my show tomorrow at 10 o'clock, the Tiger Technicians Hour. Have a wonderful evening. See you tomorrow.
Building